Hey there! Today we're talking about self-lending. If you haven't heard about credit builder loans, there are many loans that aim to help individuals with little credit, no credit, or poor credit. While self-lending is a very popular credit building option, there is a lot you should know before making your decision. This process allows people to obtain a credit building loan in the form of a certificate of deposit. Once you have completed all your payments, the certificate matures and your loan ends. Essentially what you are getting with self-lending is a small installment loan. You pay the monthly payments, and when they're finished, you get your payout and you'll notice a small boost to your credit scores. Just like any other loan, your payments will be reported to each of the three major credit bureaus, Equifax, Experian, and TransUnion. One of the credit builder loan's major selling points is easy credit building. And yes, self-lending is a simple system that can add a new credit account to your reports and boost your scores. But on the other hand, the companies you may work with don't readily mention that people are getting themselves locked into a contract. If you ever miss a payment on your credit builder loan, it is going to be reported as a missed payment to the credit bureaus, just the same as the payments you do make. If you miss that one payment, you're basically shooting yourself in the foot in terms of credit building. The positive effect from having that account is negated by the late payment. And if you stop making your payments altogether, you're getting sent to collections as well. These credit builder loans are also primarily directed towards people with little to no credit. In many cases, those that sign up for this have very little knowledge in how the whole credit industry works, including reporting dates, late payments, and collections. When you have little to no credit, getting a new negative account on your credit report is definitely not the way to get your scores moving in the right direction. The thing about these online credit builder companies is that they are providing a service that already exists with banks. You can go to a bank and apply for a secured loan, and you will very likely be able to get one. With a bank or credit union, you're putting yourself in a better position than with an online company that isn't particularly concerned with benefiting their customers. They aim to make money on their product first and foremost, which is why the loan interest rates can be very, very high with those online credit builder loans. Another big thing with credit building loans is your credit report. While you may get a small score boost from your new accounts and on-time payments, the loan is still going to show on your credit report. And just for your information, every loan company and lender knows what self-lending is. When those same loan companies look at your credit report and see self-lending, it can be a pretty big red flag. When you're trying to get a bigger, more serious loan, that's not a great thing. With credit building loans, there are really two main outcomes. Be absolutely perfect, never miss a payment, and get a small score increase, or mess up, miss a payment at least once, and put yourself in a worse credit situation than when you started. There are far better ways to repair and build your credit with loans and other cards. By doing it this way, these great loans and accounts will still benefit you and provide you with real, quality substance on your credit report, which is exactly what those lenders want to see.